Good afternoon and welcome everyone. Technology played a huge role in permitting the financial services firms to retrench at speed at the pandemic's outset now almost 2 years ago. Firms were able to shift to home working, albeit not without some hiccups, and markets stayed open during a time of great uncertainty and volatility. Here in the UK, banks were able to distribute billions of government-backed loans during the lockdown period and keep the economy going. Now we're contemplating the future, thinking about what we might want to take forward as well as new opportunities. The pandemic has changed attitudes about how we work and where we work, as well as servicing customers. But with these opportunities come new risks. Finances, digital supply chain resilience is at the top of mind at regulators who have identified new concentration and interconnectedness risks, especially as big tech becomes more entrenched in financial services and infrastructure. Today, we'll begin by assessing the opportunities, then look at some of the questions arising from the role of big tech, and finally, we will consider some of the regulatory concerns and challenges. Priyanka, would you like to introduce yourself?
Sure, Rachel, absolutely. Thank you very much. An absolute pleasure to be here. My name is Priyanka Rath. I head the Liquidity Solutions Specialist team globally within JP Morgan Payments, and I'm based out of London, and look forward to our discussion today.
Steen?
I'm Stijn Claessens. I'm the head of financial stability policy at the Bank for International Settlements. The Bank for International Settlements is engaged in various aspects of regulation to its various committees. It's a pleasure to be with you and talk about those issues.
Thank you. Elizabeth?
And a great pleasure to join you as well. My name is Elizabeth Noble. I'm a senior policy expert at the European Banking Authority. We're based in Paris, and I specialize particularly in technology and structural change in the financial sector and crypto asset regulation.
Excellent. Okay, Priyanka, let's kick off with you. What are some of the major technology trends in banking and financial services as a result of the COVID-19 pandemic or otherwise?
Thank you, Rachel. To start with, we have seen a fundamental shift in the way financial services used to be conducted, and that has been accentuated as a result of the pandemic. I'll quote some stats here, which are fairly interesting, and they jumped at me the first time I read them. The first one is the rise of the fintechs. So 75% of the global population now uses fintech services of a kind to send or receive money. 91% of the global population will have smartphones in 2026. As of 2020, the 240 trillion in global payment flows, out of that, approximately 54 trillion could be attributed to the 5 mega trends. That's platforms, online, wallets, embedded, and real time. And finally, in 2020, the market for remittances globally was $700 billion and is expected to grow at 4% CAGR. Those are such phenomenal stats, and it's a complete shift that the financial services industry has seen in a very long time. And while the last decade was about connecting people, this decade that we've stepped into seems to be more about connecting platforms. And I will urge the audience to Google "Payments Are Eating the World" by JP Morgan to tap into some of these insights, which we have researched as a firm. But big data, AI, bank and fintech partnerships, digital currencies are not just futuristic concepts anymore. They are real. We're consistently talking about them. And we are all looking at ways to ride the technology wave, to make the digital experience a wholesome one, to impact and enhance the end consumer experience. So I would say a technology wave, which was in the coming for a really long time, actually got its biggest propulsion as a result of the pandemic. And the focus on online, and the focus on super apps, the focus on faster payments, the focus on bringing the world together, the focus on frictionless liquidity management is all forcing banks and financial services to look at technology in multiple different ways to enable a better experience for our clients.
Elizabeth, As a regulator, what can you pick out of what Priyanka has just laid out for us? And
Yeah, I mean, I think looking at the European markets, we absolutely would agree with that assessment in terms of the COVID crisis really being the catalyst for an acceleration in digitization, particularly front office in terms of customers' capacity to access products and services without the need to be in physical business premises. But increasingly also now looking at the back office and the way firms are looking to invest in technologies to support processes, whether that's compliance, such as suspicious transactions monitoring or regulatory reporting, or themselves thinking about more efficient solutions in terms of business delivery through value chain evolutions. And we see that again, particularly also in the payment side. Now, we are looking at this holistically, recognizing the opportunities, but also starting to think about some of the risks here. Of course, we know operational resilience is a very fundamental concern as we become increasingly digitized as a financial sector, but there are some other considerations to think about as well. And one of the most interesting of those being what this means in terms of interconnectedness within the financial sector, but also interconnectedness between the financial sector and third parties who are perhaps technology providers, advisory service providers, etc., but they're not within our traditional sphere as a regulator and supervisor. So for me, that's really the sort of trend to watch going forward.
great, Steen, do you want to pick up on the operational resilience and the role of big tech?
Yeah, I think that's an important component of these new developments, and that's in some sense where the acceleration is potentially the highest. We haven't seen the big techs yet engaging in this area much, but of course we know quite a few are attempting to do so. And I think because of their platforms, they really could leverage very quickly and then get scale. And this is, before we're going to get back to that later, in terms of regulatory and financial stability issues, quite a concern. But nevertheless, in the short run, I think there's a lot of potential here. And what Priyanka already said, if you think of payments alone, how much there some of these big players, they're not necessarily big techs, but have become big, have provided access and financial inclusion and lower cost. We may also see that on the cross-border side. It's a little earlier there, but nevertheless, it's in the works. So I think it's an important development. Operational resilience is then the counterpart to it, right? And this is just making sure that the system works. We look at it a little bit more from the financial stability angle, from an aggregate perspective. It's not so much the individual institution or service that we're concerned about. It's the stability of the system as a whole that requires its own responses given the rapidity of the development.
Great, Priyanka, back to you. Technology offers a lot of opportunities, including the front and back office, but what risks arise and where do you think most thinking is still needed?
So I think there's smart ways that we can use technology to overcome the inefficiencies in the system. And this is not just across a bank's infrastructure, but it is across the wider industry. It is across cross-border payments. It's across ensuring that supply chains across corporates' own transactional flows are catered to and are not interrupted in view of lack of efficiency in the financial infrastructure or the system. So those are areas definitely to be looked into, under consideration. Tech alone cannot solve those. There has to be a full-fledged infrastructure in terms of regulation, in terms of liaison and partnership with the central banks, with clearing bodies, to make sure that that follows. And at the same time, I think all of us are very acutely aware of risks such as cybersecurity or cyber attacks, and being very conscious of such potential risks that exist as a result of getting more automation in place and how we can counter those. Building more automation and faster, resilient systems does not have to come at a cost of compromising on data integrity or security. And those are important and probably the most important aspects of leveraging technology as an enabler to make sure that ultimately the safety and security of consumers, of individuals, of our customers when it comes to a bank or anyone else are not compromised at any point. So those are things to kind of bear in mind. We can absolutely leapfrog the several challenges we have seen in the past years and overcome those with tech innovation, but not at the cost of obviously compromising on the aspects that matter the most, like security and safety. So I would probably call those two things out, Rachel.
Great. Steen, do you have anything to add on that point?
No, I agree. Cyber risk is obviously a very key component that we need to worry about. But I would make it more generally in the sense, and it goes back to my point about the interactions we sometimes don't know about of technology, right? So we rely on it so much, and we do see from time to time some hiccups that are not just only cyber, but more failures that cascade itself through the system. So while each individual component may look relatively safe, the aggregate is not necessarily living up to that standard. So that's something that requires more of a top-down kind of a perspective. And particularly when it comes to key financial market infrastructures that all of us rely on, of course, those need to be super safe. And there's a lot of effort on the way to do that. But nevertheless, we have to build in some resilience for those eventualities that may occur from time to time.
Right. And Elizabeth, let's move to you. Cybersecurity has really come to the fore during the pandemic. And one of the things I keep reading about is a lot of concern about ransomware. And that's something that firms need to be more alive to, especially with people continuing to work from home.
Yeah, so for us, this is an absolutely critical priority in terms of ICT, so information communication technology resilience in general. So we see this as having multiple components. The first being ensuring that considerations around ICT resilience are absolutely embedded within the risk management processes of regulated financial institutions, and to promote more consistent risk management in this respect. We have, of course, the European Commission's proposal on the Digital Operational Resilience Act, which will require there to be not least some very regular testing of resilience standards around ICT risks to make sure that those are known, understood, and effectively managed. But beyond that, there are two other components that are very important in this context. The first is actually supervisory capacity to also understand the risks and to be able to challenge regulated financial institutions effectively around their risk management practices. So for us, there's also the education piece to make sure that supervisors collectively understand the sources of risks and understand what is reasonable to expect in terms of risk mitigation around those dependencies, whether they're in-house ICT systems or they're built on from third parties. And for that third pillar, under the DORA proposal, we also seek to extend measures not only to regulated financial institutions, but also critical third-party providers of ICT services, so that they will be subject to requirements themselves to also manage operational risk elements, but in addition to actually give them an oversight framework. So we're essentially extending the perimeter directly to technology service providers, recognizing that they are essentially becoming significant infrastructure providers to the financial sector. So we've already mentioned on this panel, of course, traditional market infrastructures. Well, now as relevant and increasingly relevant are these technology infrastructures. So we need to make sure that we can effectively manage risks around those providers. And under the DORA proposal, one aspect of that is to bring them in direct oversight for certain purposes.
Okay. Just keeping an eye on the clock and going to move on to some of the issues that are coming into financial services with the role of non-banks in financial intermediation, and that could include some of the big tech players. So Steen, I know this is an area of concern to you in particular. Can you pick that up for us, please?
Yeah, sure. We just came out with a quarterly review of the bank financial settlements, and we just focused on the non-banks. Of course, it's first important to acknowledge they've grown very rapidly since the global financial crisis in 2008, 2009. And they're an important source of diversity. They've taken over quite a lot of intermediation from banks. And by doing that, they've in some sense added robustness because diversity is also a way to achieve the risk reduction in the process. And they've also, in that sense, helped with growth because often for innovative and particularly for smaller firms, non-banks is a very good vehicle for getting access to financing. So this is a good thing in that sense. They have provided a little bit of a spare wheel as we improve the banking system. Of course, we impose some regulatory cost on the banks, but then that has been compensated by the growth in these non-banks. Having said that, we also then have a regulatory duty in some sense to make sure that that part of the system is equally sound and secure and can withstand shocks. And there, at least in March last year, we saw some major shocks that hit the non-banks, or at least let's put it this way, the non-banks didn't reduce the shocks, were maybe a source of propagation. The channels by which it happens were fairly well known. It was the usual liquidity and leverage mismatches and imbalances that came to the fore. But the regulatory response was much more built on a kind of a bottom-up, individual case-by-case, institution by institution, or investor by investor basis. I think that's where the challenge at this point is: how do we become more of a macroprudential oversight that we did apply to the banking system to this part as well? Because in the end, what happened in March 2020, as we all know, the central banks had to step in and provide significant support to this part of the financial system. And of course, we don't want to find ourselves in that position going forward again.
Right, Priyanka, what does digitalization, DeFi, and crypto mean for financial services provisions?
So I think it's an area which still has a lot that we as an industry need to figure out. And I think the first thing which we need to think about is regulation around this space, and therefore that will drive how any financial services provider or a non-financial services provider will operate in this space. We obviously read in the news, and the verdict is out there in terms of how consumers have reacted to crypto and the adoption of crypto in many settings. And it's an area which, as an industry, as I mentioned, we all need to think about and watch closely as how that evolves. There's no immediate answer, I would say, Rachel, but you can see consumer adoption and something for us to be aware of. I think it's also one which has to see regulation shape it and define it over the years. And only then can a financial services industry think about how to react to cryptos. But it's an evolving space. When we look at digital currencies, which I think is totally different, right? And so in April 2021, the bank and Her Majesty's Treasury initiated the joint CBDC task force to coordinate the exploration of a potential central bank digital currency in the UK. And even that is in early stages, and that's a different ball game. It could be a game changer, but we have to just watch and wait for some of that space to evolve to then see how digital currencies can truly enhance the customer experience or the consumer experience in a regulated manner. I think that is the more exciting space to watch out for.
Yeah. Elizabeth, can you chime in on crypto and DeFi, please?
Yeah, so I mean, for us, we already have the legislative proposal in place, the regulation on markets in crypto assets, which is under discussion by the Council and the European Parliament effectively as we speak. Now, this measure is intended to address risks that we saw by virtue of the fact that the majority of crypto assets in circulation in the European market do not fall within existing EU law. As a result, we have uncovered risks, notably to consumers. We also have, of course, potential lost opportunity because crypto asset service providers may wish to scale their services cross-border within the union, but would have to conform to multiple domestic frameworks applicable in the relevant jurisdictions in which they wish to transact their services. So the MiCA proposal aims at mitigating risk in the crypto sector and allowing for that opportunity where there are real benefits to be gained from issuances of, in our language, e-money tokens, asset reference tokens, and also crypto asset service provision, which is a growing and increasingly relevant business, notably exchanges and custodian wallet providers. DeFi is interesting. We're closely monitoring this too. The label is, of course, a very broad one. It can mean very different things in very different contexts, so we always have to look behind that label. Some so-called DeFi ecosystems would also be covered by the MiCA proposal. Others may fall outside to a certain degree. This is something we're closely monitoring as the DeFi universe continues to evolve.
Great. And Steen, would you like to add anything on that?
No, I think there are exciting developments in both the DeFi and the crypto space, but it's also necessary to ask from time to time, is it serving the social function that we like in the financial system to provide? And then objectively, these things are not yet ready for, in that sense, prime time in many respects. I mean, as a payment vehicle, they can be very costly for the moment. The stability clearly in the price behavior is not there, but also more fundamentally in the way that some of them are designed. They have some features of systems that in the past at least have shown failures in terms of having a run, let's say, on a stable coin that's not fully backed with the safe asset that we would like it to be backed up with. So we should have some serious questions, and this is where the regulatory response is necessary and useful. There's also global dimension to it, of course. These things immediately escape individual regulatory bodies, of course. So
Yes.
we need a global standard for that. Here at the BS, we have been developing together with IOSCO and the CPMI as a committee here, a standard for global stable coins. What should they serve and what kind of rules should they be subject to? Because they are becoming almost like a critical market infrastructure if they take on the scale that we expect they could. So there's a regulatory agenda that has to come along with the development of this industry.
Yeah, that was my feeling, is that that's what we're struggling with a bit here in the UK, is the companies, crypto companies that see themselves as being global and not particularly based anywhere, wanting to do business here, coming up against our rules and regulations. People aren't sure where they sit on the perimeter. And another thing that's been observed here is just firms, the crypto firms, not in all cases, but in some cases, struggling to get up the curve in terms of what's expected of them from regulators, how to have proper systems and controls around things like money laundering and financial crime. And obviously client assets is going to be a big one for them as well, especially with some of the issues they've had with wallets being plundered and hacked and whatnot. So I think, like you said, Steve, this is all very much in play, and people are working really hard because, as Elizabeth said, on the one hand, we want to invite innovation, but on the other hand, we have to be very careful. Okay, and on that same kind of theme, what do these new players mean for financial stability risk? Steen, back to you for a sec.
Yeah, I mean, so I mentioned some of it, but it's really the scale at which it can happen and whether we can then, as a regulator, be a little bit behind the curve. And then it's, of course, hard to pull it back. And I'm alluding here to some developments in emerging markets where we've seen things really take off in a very rapid period of time. Take China in terms of payments, where it went from 0% to a completely digital market, which again has had many benefits. But at some point, the regulatory authorities said, well, we have to be careful here because there's both a financial stability risk, but also a monetary stability risk in the sense the payment system becomes outside of our normal purview. And that we could see then even at the global level with some of these big techs. Now, to answer that question is not only a financial regulatory question, because we're then getting to the core what drives the business models of big techs, which is all about data, of course, and a platform that they can provide to the user, where maybe finance is only a small piece, but nevertheless has the ability to scale up very rapidly. There, other regulatory bodies are key. So at the national level, European level, global level, there has to be the debate, which is happening in some places, on how we put these pieces together. What privacy rules do we have in place that may limit this? What financial stability rules can do that? And then we have to think whether we want to even regulate these big techs from a financial perspective in a somewhat similar way that we do bank holding companies, where we say you can engage in activity X, but you need to structure yourself in the following way. Maybe for big techs, there's an equivalency there. I mean, you can engage in finance, but you have to regulate that piece of your business, not only in the balance sheet sense, but also in the data sense, somewhat differently, to avoid these intermingling combinations that are both bad for, I think, stability, but also for competition and for in the end for the user in terms of protection against misuse.
Priyanka, would you like to come in on this one?
Yeah, I mean, I would just, I think, echo everything Elizabeth and Stein just mentioned. Anything, when we are in an industry where the benefactors are end consumers, I think there's immense requirement and need to be extra cautious to ensure that their day-to-day lives are not impacted in any negative way. And financial services is no different. And having worked in a regulated industry for a long, I think I've been in a bank for as long as I can remember, that is the fundamental premise with which you work every single day. It is to ensure that your clients have the best experience, but at no point is the financial services industry impacted, or your consumers are impacted negatively as a result of anything which is purely track driven or purely incrementally driven from improving the bank's experience. So I think those are fundamental issues. This is a hugely upcoming area, and as I mentioned earlier in my conversation, it's a space to watch out for. And I would probably be watching the regulators very closely, I think Elizabeth and Stein in this case, to wait and see what comes out in the back of that, to then start actually thinking about it. But the central banks are starting to take a leadership here only on digital currencies, not crypto. And again, that is purely intended at improving the end consumer experience, to minimize friction in that world, to help people like you and me conduct our business better. And that is a space, yes, there's scope for private financial institutions and banks to partner with central banks and to share technology and best practice the best way we can.
Elizabeth?
I mean, again, I think we're all tending to agree with one another on this panel, which is refreshing and nice. But where I really see the sort of need for further work is really thinking about these issues from a cross-disciplinary basis, because we're seeing technology create new interconnectedness and concentration risk within the system. We see data also creating new concentration risk and interdependencies within the system. And that can impact the provision of a wide range of services, not limited to financial services. So when we're thinking about the new regulatory approach, we need to think about these things through, of course, our traditional financial services lenses, but also leveraging inputs from data protection authorities, competition authorities, and so on, and really thinking about this in a very holistic basis to work out what do we need to do next, if anything. And again, in the European Union context, we have already on the table the Digital Services and Digital Markets Act proposals, which are intended to address competition issues around so-called gatekeeper platforms ex ante, because we know from experience ex post competition remedies are essentially too late in the day. Really, we should be taking these issues head on and mitigating risk to competition up front around how platforms actually operate. But we're still looking at this more from a financial services perspective, and next year we'll report on the way we see big techs, other types of mixed activity group, value chains and platformization impacting the EU financial sector, and what we need in addition to the existing proposals to make sure that our regime is fit for purpose in the digital age.
Back to picking up on something that Steen touched on, which was sort of an international response to some of the DeFi's and cryptocurrency firms. Technology crosses international borders, and how can different regulators harmonize their approaches? Steen?
I mean, I think it's happening to some degree, but I think more needs to be done. We're working on it. I mentioned already the stablecoin work. There's the Basel Committee on Banking Supervision that also has come out with guidelines, and I think we can expect more going forward. That is nevertheless not easy because the discussion also has to happen within the jurisdictions, and without having that, it's hard to come up to a global standard, of course, if you can't agree within the major jurisdictions on some of these issues, and they are cross-sectoral. I think the response would have to be more than that, of course, and I don't want to always stress regulation. I think central banks are acknowledging these issues that are in part coming from a user perspective, right? So there's a demand for certain services. So let's go back to payments, cross-border payments in particular, but more generally, we can do a lot better. And we, meaning collectively, the private sector, central banks working on making payments cheaper, faster, more accessible, at lower cost to everybody, domestically as well as international. That is not a defensive response, it's a positive response, which we should do. We at the BS have been trying to do that on the cross-border by having an innovation hub where we have central banks talk to each other and exchange experiences. We're applying that a lot, for example, now to CBDCs. It's a big discussion in the central bank community. How can we introduce a CBDC for both wholesale and retail? Many people approach that from what's the use case? Do I want a CBDC as an individual? Sometimes you do, sometimes you don't. I think there's a complementary way of thinking about it, is that what does a CBDC as a platform provide relative to other platforms that exist out there? And I think if we can get a platform both the data, competition, and finance are kind of working together. And emerging markets actually have an interesting experience there. I can use the case of India. They have something called the UPI, which is a payment platform, which also has a data component to it, a data steward, and linked to biometrics and what have you. That's very enticing in terms of leveling playing field across a number of these dimensions. So if we work collectively on those, as like I said, not a defensive response, but rather providing the services that society wants to be delivered.
Okay, so we've got some collaboration going on innovation and testing new ideas. I mean, what about some collaboration on potentially making some new rules? And while Steve was talking, the idea of how the world approached derivatives regulation and reporting in the post global financial crisis sprung to mind. That really took a lot of global leadership to bring about massive change in the industry. I mean, do you think this is what we're heading towards, Priyanka?
Yeah, I mean, again, I think a question that my esteemed panelists representing the regulatory bodies are much better placed than me to answer. But I think the aim of regulation always is consistency, right? We set a standard, and we to Stein's point, it's a level playing field where people across the economic spectrum benefit. And that's the whole premise that drives. And I've talked multiple times about the end consumer experience, but it's a level playing field. It's sharing of best practice. It is sharing best technology. It is innovating, but with an eye on risk. And again, it's across borders. It is across geographies. It is enabling a supplier in a smaller country to access a buyer in a bigger country, and or purely by size or jurisdiction, and vice versa. It's accessing a manufacturer in a large country to access sellers in multiple smaller countries. So it's basic things like that, but at the cost of, not at the cost of, I guess, compromising on data integrity, not at the cost of reporting, and not at the cost of having an eye on how these financial transactions are flowing through the infrastructure or the system, to ensure that everything else that we have as an industry work towards, all of the data protection, the AML regulation, anything which has got to do with preventing financial crime, all of those continue to be adhered to. So there's no lapses in the system. And as a financial services industry, we've gone through this in a fairly rigorous manner over multiple years, but technology is kind of disrupting and exploding this to a different paradigm. So yeah, we can leverage all of that experience to maybe translate that to a new framework going forward. And we have all the experience of having implemented it in the past. We just need to take a step back and think about how we can then proactively enable the future.
Right. Elizabeth, do you think we're going to see some harmonization in terms of tech rules, looking at leveling the playing field and mitigating regulatory arbitrage?
Yeah, and I think it's clear already at the international level, we have quite a number of work streams underway that go precisely in that direction, but they're starting first with exploratory work, and then of course we can conclude where we need additional measures or to change measures as required. I would highlight, of course, the work as described on so-called global stablecoins and other crypto asset activities. I would also highlight AI as a very relevant area in this context, because if globally active institutions are looking to invest in AI solutions, they're probably going to look to their supervisors and hope for a consistent set of measures in terms of supervisory expectations around the use of those solutions in common use cases, so for credit scoring and so on. So I think we will be pushed to also continue discussions in some areas to make sure that we do have that sort of consistency of approach. Whether that results in rules or not, I think it's still bringing supervisors around a common table to build a common perspective around the acceptability of some of these technologies that do require significant investment and also significant lead in time in terms of design, testing, and eventually, of course, rollout. So I think we will see at the international level continued discussions on so-called stablecoins, crypto assets, innovative technologies such as AI, and then also some of the macro questions around big tech and the role in financial sector, where we have very practical questions around things like concentration and resilience, but we also have some fairly big philosophical questions around concentration within the financial system and where we see pockets of risk. So some really significant topics for continued discussion.
Excellent. And why don't we just finish really quickly with some of the key challenges for industry and regulators for the next 5 years. We've got a couple minutes to go. So Priyanka, why don't we start off with you?
Sure. I think I would call it less of a challenge. I think it's an opportunity for financial services providers to definitely think about. I think technology is moving at a rapid pace, specifically the front end, and the expectation of our clients and the end consumers in terms of their expectations to move faster, quicker, do seamless, frictionless payments. We also have to make sure that the back end keeps up. So core technology, that transformation has to be.
Yeah.
We have to keep an eye on that, making sure that we're scaling up and backing the front end transformation, which is happening at an incredibly rapid pace. So yeah, this is an opportunity, and for us as an industry to think about and then invest more in our infrastructure, or look at things we can do better to ultimately drive that end consumer experience.
Elizabeth?
For me, I'd highlight monitoring capacity. So for supervisors, really building monitoring capacity to understand interconnectedness and concentration risks within and beyond the financial sector. I think it's also about understanding technologies, their applications within the financial sector, and the potential opportunities offered by those technologies, in turn feeding into that discussion around risk and risk mitigation. And then finally, I think we will also need to work closely with industry in terms of collaboration on RegTech and subtech solutions. So for me, they go completely hand in hand. So I think we'll see an acceleration of attention to make sure that we can get the best out of those technologies.
Excellent. And Steen, would you like to add anything at the end here?
Well, I think many things have been mentioned, and I agree with all of them. I think we shouldn't forget what's happening to the banks. And I'm not talking about big banks necessarily, but I'm talking about maybe smaller banks they're going to be challenged by all of this, right? So it's both adopting digitalization in a productive manner that comes with a cost and a big investment that may not be feasible. So there are going to be some banks and maybe even banking systems that are going to be challenged. And related to that is this global dimension. The need for standards is obvious because we want a level playing field. Because short of that, there may be some economies for that matter that are going to be really hurting here. And if you think of dollarization in the old days, there was a major threat to emerging markets. Have of course improved the monetary and financial stability frameworks a lot. But this is a threat that is a little bit outside of their purview, right? It can come from outside. It's on outside their perimeter, and without giving a good framework for it, we could see some real challenges there of money in some sense leaving those countries, and that would have, of course, devastating consequences. So the urgency is there to do this and to do this right in all dimensions.
Excellent. Alicia?
Perfect. Thanks very much. Thank you, Elizabeth, Priyanka, and Steen, and Rachel for kicking off the day with such an insightful discussion. If you have any question for any of these fantastic speakers, please feel free to reach out to them directly, either via the networking platform or on LinkedIn. Up next, we have an exclusive interview on responsible banking, aligning finance and sustainability with Kelly Fisher, Head of Corporate Sustainability at HSBC. The interview is conducted by Lindsay Rogerson, Senior Editor, Regulations at Thomson Reuters.